Hello and welcome to the Seaspray Private Investment Review and Outlook for 2026, Navigating Growth and Geopolitics. My name is Cathal Slevin, Investment Market Research Analyst with Seaspray Private. Before we look ahead to 2026, it's important to first set the scene. 2025 was a year dominated by the T word, Trump, trade and tariffs, together with heightened global geopolitical tensions. It was a year of uncertainty and volatility, yet also of resilience and growth. Despite this turbulence and uncertainty, if we look at the chart, global financial markets performed exceptionally well, with major markets delivering double-digit gains, with key fundamentals and trends, such as company earnings, falling interest rates, and inflation moving towards central bank target levels, all supporting equity valuations. The US and Europe delivered gains of between 15 and 20%, while the UK outperformed, rising over 20%. Turning to Asia, Japan's Nikkei 225 gained more than 27%, while China's Shanghai Composite rose by over 18%. Globally, the All-Country World Index reached a new high in 2025, and nearly two-thirds of the countries that make up the index also finished at record highs, highlighting the breadth of the current equity rally. In conclusion, 2025, despite the tariffs, headlines, rhetoric, and general uncertainty, rewarded investors who stayed the course. This reinforces our long-held belief at Seaspray Private: time in the market versus timing the market. Now let's turn our attention to 2026. While there are both headwinds and tailwinds that could impact the global economy, we believe two key G forces will have the greatest influence in the year ahead: growth and geopolitics. We remain bullish on the global economic outlook, with global GDP expected to average around 3% in 2026. While growth may slow slightly compared to 2025, we do not anticipate a significant contraction. Instead, we see 2026 as a more grounded year for global economic development. Although inflation has eased considerably across developed economies, it remains stubbornly elevated in regions such as the US and the UK. As a result, central banks are likely to maintain a cautious approach to interest rate cuts. If rates remain higher for longer in 2026, this could dampen growth. However, as recent years have shown, the global economy can continue to expand even in an elevated interest rate environment. As for the EU, a pause in rate movements is expected due to a succession of previous rate cuts and tempered inflation rates across the bloc. Another key factor for growth in 2026 will be the labour market, particularly in the US. While we do not expect widespread layoffs, labour conditions have tightened and are likely to remain tight throughout the year. This could slow consumer spending, which is the largest contributor to US GDP, and in turn, weigh on overall growth. Alongside economic growth, we believe equity markets continue to advance in 2026, albeit across a broader range of sectors. In recent years, technology stocks, particularly in the US through the so-called Magnificent Seven, have dominated market performance. However, gains in 2025 were more balanced. While technology, and AI in particular, will continue to underpin equity market growth, sectors such as industrials, energy, and financials have also delivered strong performances, driven by macroeconomic and geopolitical dynamics. Earnings will be another crucial support for equity markets. In the US, the S&P 500 is forecast to deliver earnings growth of approximately 15% in 2026, well above the 10-year average of 8.6%, with all 11 sectors expected to report year-on-year earnings growth. As long as earnings continue to justify higher valuations, the risk to markets entering extreme bubble territory remains relatively low. That said, the primary risk to global markets in 2026 is geopolitics. Global fragmentation increased in 2025, driven largely by US tariff policy. While markets adjusted to this in the second half of the year, any further shifts in US policy could once again reverberate across the global economy, with direct implications for growth and equity markets. Adding to this, US midterm elections will take place this November. These elections will be pivotal in shaping US policy for the remainder of the current administration's term, and could either embolden more radical action or signify limited policy-making power. Turning to areas of opportunity, we remain strongly committed to artificial intelligence and clean technologies. In AI, we saw record-breaking levels of investment in infrastructure during 2025, and this trend is set to continue in 2026. Over $1 trillion has been committed to AI build-outs, with nearly $600 billion expected to be spent on data center capital expenditure by just 6 companies this year alone. While questions remain around when companies will fully realize returns on this investment, AI capital expenditure will be a major driver of macroeconomic growth, particularly in the US. We also believe 2026 could mark the rise of the AI appliers, companies focused on improving margins and operational efficiency using AI, rather than solely those developing the underlying technology and infrastructure. Beyond this, AI will continue to drive growth in power generation, grid development, and rare earth minerals, all critical components of AI's long-term expansion. In clean technologies, despite recent pressures from a range of factors, the long-term investment case remains compelling. According to the International Renewable Energy Agency, over $2 trillion was invested globally in clean technologies in 2024, a new record with renewable energy investment alone reaching $807 billion. This has been supported by favourable policy developments, particularly in China, which has committed to installing 3,600 gigawatts of solar and wind capacity by 2035. In the US, investment in clean technologies reached a record $279 billion in 2025. As a result, we remain extremely bullish in this sector and believe it will continue to be a key global growth theme for decades to come. To conclude, as we look ahead to 2026, uncertainty will undoubtedly remain. But history consistently shows that markets reward patience, discipline, and a long-term perspective. In a world of constant change, one principle remains timeless. Successful investing is built on patience, perspective, and time in the market. Thank you for watching our 2026 investment review and outlook. To stay ahead of the curve, follow Seaspray Making Waves, our quarterly financial outlooks available to watch and listen to on YouTube, LinkedIn, Spotify, iTunes, and via our website at www.seasprayprivate.ie. You can also subscribe free of charge to a weekly market review written by myself, which is published every Monday morning and available on RT Business page. Stay invested and stay tuned.